Hey there, Brad Castro from GreatOptionTradingStrategies.com. If you've ever tried to win anything at a carnival or fair, you know it's damn near impossible. Why does that giant teddy bear have a thick layer of dust? He's been with the carnies longer than half the crew. The basketball hoop is an oval, not a circle. The milk bottles are weighted at the bottom. The BB gun's sights are bent. The operator isn't lucky when you lose. He designed the game so that winning is nearly impossible for you and guaranteed for him. If you sell options for income, or aspire to, you should feel exactly like that operator, that you've rigged the game and that you're most likely going to win no matter what. It's what I call heads you win, tails Mr. Market loses, and it's what we did with 4 real-world trades we closed this week inside the Leveraged Investing Club. Now, no promises, but I'm going to try to start putting together weekly option selling trade recap videos for you guys to demonstrate the unfair advantages you actually have as put sellers or covered call writers. Because there's nothing like actual documented trades to show you how principles and theories get applied in the real world. And I discovered this a long time ago. Every trade has something to teach us or reinforce in us. Now, this is not generic option selling 101 fluff. When I say heads you win, tails Mr. Market loses, it's not hyperbole. If you sell puts or write covered calls for income, you should not be losing money. Now, is that a guarantee you'll always have a 100% win rate? Of course not. I don't even have that myself. But on the rare occasions that I do book a loss, it's almost always because I screwed something up. So today I'm going to share with you the 4 winning trades we closed this last week inside the Leveraged Investing Club and do a deep dive on one of them to demonstrate what a really good setup and entry looks like. And one of the 4 trades we successfully closed was one that had to be repaired and which had really traded underwater on us for a while. I'm not going to do a deep dive on that one today. I just don't have the time if I want to get this video out. But I likely will at some point because the true magic of option selling are those tail trades where the trade completely goes the wrong way in you and yet you're still able to repair it and walk away with still okay to decent returns. And sometimes excellent returns like we did with our Abercrombie & Fitch trade this week. The point is you can rig the game so that losing trades become winning trades and you don't have to book a big loss or resort to the wheels strategy and just cross your fingers and hope that the stock will simply come back and magically fix the situation for you. Now, regarding today's weekly recap, and I think you're really going to like this, I've had an epiphany this week and I've decided to really hyper-focus the mission of this channel. From here on out, every video I put out will be about one thing, showing you how to sell options for safe, consistent, high-yield income, just like we do inside the Leveraged Investing Club. And why is this important? Well, inside the Leveraged Investing Club, we view ourselves as the insurance company from hell, where we sell lots of premium and then avoid like the plague ever paying out a claim, meaning booking a loss on the trade. Now, I really like this graphic here because there are basically 7 pillars or aspects to how we sell options for income so effectively. And that means that every video I post now should address at least one of these categories. So why am I doing all this? 2 reasons. First, there's a growing mania and casino mentality that's been sweeping the market in recent years. It does not end well. So at one level, I'm trying to help protect individual traders and investors from getting sucked into that madness and suffering massive permanent losses of capital at some point. And there will come a day of reckoning when that happens en masse. But if you spend any time on Reddit, for example, a lot of people have already experienced this on an individual basis. And it's just so unnecessary when there are safe and sensible, and yes, even lucrative market-beating alternatives out there. And second, I know that once you see the actual customized strategy we use, which I call the sleep at night high-yield option income strategy, that at some point you may want to join the private Leveraged Investing Club community yourself. Now, this is not a sales pitch because you can't actually join the Leveraged Investing Club today because the doors are currently closed. And I only offer readers of my daily option tips and insights newsletter 1, sometimes 2 opportunities to join us per calendar year. You can see the pinned comment below to sign up for the newsletter, or you can download any of the ebooks, strategy guides, special reports, etc. from the Great Option Trading Strategies downloadable library page. There's a link in the description below and get the newsletter that way. Okay, so let's get into rigging the option selling game. Here are the 4 trades we closed this week. There was the aforementioned Abercrombie & Fitch campaign that originally began as a short put position, but ended as a covered call. It really went against us, and yet we were able to walk away with 20.39% annualized returns over 300 days. We also closed a Nike trade that resulted in 18.18% annualized returns over 20 days, a TROW trade, which we'll do the deep dive on, that resulted in 40.03% annualized returns over 9 days, and a short trade on Dell that resulted in 29.03% annualized over 8 days. Okay, so today I want to look at the TROW trade and show you what a really good put-selling trade setup and entry looks like. In the sleep at night strategy, we consider 3 factors when deciding whether to enter a short put or covered call for income trade. Those 3 factors are fundamentals, valuation, and technicals. Now, I'll be honest, the fundamentals have become less important as the sleep at night strategy trade management and repair process has become much more refined and effective, so that we're theoretically open to selling puts on any stock as long as the underlying business is firmly profitable. If it's firmly profitable, it can't trade down to zero. And if it can't trade down to zero, we can repair it. But valuation still matters on our core trades. And while the technicals aren't the sole factor we look at, we definitely require a favorable technical outlook before we'll sell puts or write covered calls. Basically, we're looking for key support levels where support has proved itself. It's not enough to simply identify support. We want to have the confidence that that support is going to hold. So we'll often enter trades after a stock successfully tests support and then starts moving higher again. When we sell puts or covered calls for income, we're basically betting that Mr. Market won't push the stock below a certain level within a certain time frame. And if the stock is bouncing off a key support level, that's an excellent time to insure Mr. Market stock against a breakdown in the share price. Remember, we're the insurance company from hell, and we don't pay claims, i.e. accepting a loss on a trade. And the best way to go about that is to not have a claim filed in the first place. That means very tight and disciplined underwriting standards. This is not about randomly picking a stock and selling puts at an arbitrary delta. This is about actually looking at the chart and seeing how a stock is behaving. We want intelligent trade entries, not statistical probabilities, which have a funny way of not being all that accurate anyway. So our TROW trade here is a really good example. You can see that $95 level was a key area. It previously served as resistance a couple times back in May and June before the stock broke out. So this chart was from after the market closed on Friday, November 21st, and I put it together over the weekend as part of a write-up for the official club trade the following Monday. One of the many perks of the club is that each weekend I post a full write-up on an official club trade idea. We usually have 1, sometimes 2 new trades per week. And then I actually trade it myself and send out alerts in real time to club members anytime I enter, roll, adjust, or exit a position. Also, a quick side note, all memberships are lifetime memberships with no recurring subscription fees beyond the one-time cost to join the club. So that means once you recoup that one-time cost, you're basically getting the club, the weekly trade ideas, the club community, and me for free. Okay, back to the TROW chart. Another technical indicator we use is the MACD Histogram, or those blue bars behind the MACD and signal lines at the bottom of the chart. Now, it may be hard to see, but ideally we like to see those bars reverse from declining and start ascending or increasing again for 2 to 3 consecutive trading sessions. And that's what we got with TROW. Now, admittedly, this is not exactly what the histogram was designed for, but it's interesting because we've had a lot of success with our setups when we get a reversing histogram in those 2 to 3 days where it moves higher. Finally, the cherry on the top, and this isn't a requirement, but more of a bonus. If we see that the RSI is bouncing off of an oversold reading, which is anything below 30, we love that. In this case, we didn't quite get an oversold reading, but it came close. So from a technical perspective, this is a pretty good setup. I also really like the fundamentals and valuation of TROW. TROW carries 0 debt on the balance sheet, prints money as an asset manager, and was trading at a very attractive valuation, with a forward PE below 10 at the $95 strike price we were looking at. Even more impressive was the dividend. And TROW is also a dividend aristocrat with a 39 consecutive year history of annual dividend hikes. And at that $95 strike price we went with, the yield would have been 5.35%. Finally, there was no exposure to an earnings release, which we always avoid when setting up a new trade. So all in all, a really high quality setup here and pretty much everything we look for, assuming the actual premium payout is attractive, and it was in this case. Not surprising then, the trade performed very well and the stock moved higher and up toward that resistance area around the 105 share price level. Okay, to recap the trade. On Monday, November 24th, with TROW trading at $99.69 a share, we sold December 19th, 2025 $95 puts for $1.20 a contract, or $120 per contract, less commissions and fees. Fast forward 9 days to December 3rd, and TROW was trading at $104.59 a share, and we were able to buy to close those puts for just 25 cents a contract. The stock would actually trade even higher and above that 105 level, but that was fine with us. Exiting the trade when we did made a lot of sense. We were able to lock in the bulk of our max potential gains in an abbreviated time period and free up our capital way ahead of schedule. and we more than doubled the annualized ROI on the trade from the original 18.27% annualized rate projected over 25 days if held until expiration versus the 40.03% annualized ROI over 9 days that we walked away with. Looked at from another angle, what we left on the table by exiting early, 25 cents a contract, would have accrued at just a 6.03% annualized rate from that point on. So here's the point. This approach to entering and exiting put selling and covered call for income trades is a really good model. Sell to open cash secured puts and covered calls at proven support and then buy them back at resistance. That's how we want all our trades to go. And that's how many of them do go. But of course, Mr. Market loves throwing the occasional curveball. Trust me, we'll have plenty of opportunities to cover trade repairs because that really is the crux of option selling success. Or as an insurance company from hell, how do you avoid paying a claim when one gets filed? What do you do when an option selling trade goes against you? But today I just wanted to show you what a quality put selling or covered call for income trade setup looks like. And Dell and Nike and even Abercrombie & Fitch had similar setups. I probably will revisit the Abercrombie & Fitch trade in a separate video because that one really did move the wrong way on us. And there's a lot to see in that trade repair campaign. And it's also a perfect example of tails Mr. Market loses. Because despite how deep in the money our position initially traded against us, we still walked away with 16.79% overall gains or 20.39% annualized over 300 days. And the stock is still trading well below our original entry point. If Mr. Market weren't such a multi-trillionaire Neanderthal bastard, I might actually feel sorry for him. Okay, let me know in the comments how you like this new weekly recap and deep dive on an individual trade format. Or if you have any questions about the TROW trade or the others. And with our 7 pillars here, are there any areas you'd like me to cover in more depth first? Now, I haven't really been begging for comments, likes, and subscribes, but perhaps I should. I'm biased, of course, but I see lesser channels that are more corporatized getting a lot more views. So likes and comments and subscribing are mucho appreciated. And if you enjoyed this and want more, be sure to check out the channel's other videos. I'm actively adding new content and have a backlog of video ideas I want to share with you. I'm also organizing these videos in various playlist categories, so that should make it easier for you to find the resources that are the most valuable to you. Also, sign up for the Daily Tips newsletter via the pinned comment below. The newsletter is a tremendous option selling insurance company from hell resource and really complements the YouTube channel, as some topics are better suited in article format and some are better suited in video format. Both resources are all about heads you win, tails Mr. Market loses. So unless you're already killing it and can easily find great new trades every week and can consistently turn losing trades into winning trades, the newsletter is a resource you're going to want. Again, you can sign up directly, or there's also a link in the description section below to the Great Option Trading Strategies downloadable library page. Download anything from there and you'll also begin receiving the Daily Tips newsletter automatically. Heads we win, tails Mr. Market loses. That means you should be coming out ahead on virtually all your trades. Okay, until next time.